I've spent over a decade in finance, auditing millions of dollars daily. Now, from inside the Fortune 500, I'm giving you data-backed advice you can actually trust. In this short video, you will learn a memory trick that not only simplifies key aspects of US finance, but will lay out step by step how financial experts recommend you should apply it.
Your word's good enough for me.
For my studies 7 years ago, we call this memory trick a mnemonic. And here it is. Smart immigrants expect emergencies but tackle debt before investing. Yes, this is a phrase or a term, but hidden, if I may say, within this phrase that I hope you will remember is the pathway on how you can succeed with your money in the US. Okay, so the first word in our mnemonic is smart. When we see that S, I want us to think of SCORE, standing for credit score. What a credit score is in the US is a little bit misleading as a gamified number that maybe if you achieve and or play a game to get, you can prosper. But that's not exactly how I prefer you look at it. I want you to see the credit score as your financial identity, so to speak. Whether in the playground or from another country, we typically used our names, but in the US national financial system, we use our financial IDs, our credit score, for everyone to know our track record. An optimal credit score may be anything above 700, which is super achievable. All you have to do is apply for a credit card, set up auto pay to pay off that credit card, and then set up auto pay to pay a phone bill using that credit card. I recommend a phone bill or maybe a low bill or subscription. That way you never have to worry about it getting out of hand. And once that's set up, feel free to cut it up. The next word in our mnemonic is immigrants. When we see immigrants, I want us to think of insurance. It is important that we insure or defend ourselves against unforeseen issues. So if we have insurance available as a benefit through our employer, please go ahead and register. Which leads me to the next word, expect. And this is where we take our defense into our hands, standing for emergency fund. This is where you effectively self-insure. A good step is to save about $1,000 as a buffer. Again, in this order, before you do anything after this step, you ought to have $1,000 saved. So with the other E in our mnemonic, I want you to think of estate plan. Estate plans are like wills, trusts, things of this nature that allow you to avoid international probate, meaning your stuff getting stuck in bureaucracy. That could be your emergency fund, that could be insurance owed to you or your dependents. So at this stage, maybe you don't need to establish a whole will or a trust, but at the very least, this is time to assign your beneficiaries, those who will receive your cash should anything happen, or the benefits from your insurance. The next word in our mnemonic is tackle. When we hear tackle and see that T, let's think of taxes. This is where the 1040 form comes in. This is the form that all US persons file on an annual basis to either claim a tax refund or submit a record of the taxes that the person owes. Through your employer, you may have already paid or overpaid in advance, which may make you eligible for a refund. So don't leave money on the table. I recommend planning with a tax professional, and even if you don't, I recommend using freetaxusa.com, an IRS partner that is free for federal taxes. It's cheap, efficient, and honestly better than paying TurboTax. It works just as fine. Pro tip. The next word in our mnemonic is debt, and it actually stands for debt, at least debt management. We may have come into this equation with some debt, hopefully not on a credit card, but this is where we want to pay down our debts. And this is important because what is the point of building our wealth if debt is just going to eat it down? Which brings me what I enjoy most, which is the offensive part in this strategy. Notice how much defense plays a role. This is also reflective of how things are in the Fortune 500, and it's why I recommend it for you. A lot of what is done is to protect your finances, and this is where a lot of us get it wrong, and I hope through this mnemonic you can get it right. So, investing. This is where terms like 401k comes in. What is a 401k? It's not an amount or a goal that you need, such as 401,000. It's not a form even, but this is an arbitrary location in the law that made retirement investment funds available to the majority of the US at tax efficient rates. I recommend you use this 401k by enrolling with your employer. Oftentimes, they're matching up to 3% of what you put in. That's money on the table. Please don't leave it there and enroll in your 401k. If you don't have a 401k or you maxed out how much money you're able to put in, then you can use an IRA, which gives you more control and more flexibility on how you can invest your money. This is an option for anyone, whether you're employed or unemployed. You can use this tool. I personally have a 401k and an IRA, and I leverage both for different purposes, in addition to what one calls a taxable brokerage account. Rather than saving, I often use my taxable brokerage account for investing in secure, low-risk investments. If you want to learn more about any of the items discussed in more detail, please check out my channel for free resources and or leave a comment below, and I'll tell you how the Fortune 500 either exploits this or what I've seen the rich do from my decade plus years of experience being around the uber wealthy.